Today we're going to analyze the well-known company Meta, formerly Facebook, whose shares are currently trading at around $692. So let's take a look at the chart. Here we have monthly candles. What do I want to show? First of all, we had a situation in 2018 where a divergence was formed. There was an important support level at the point of divergence formation which was broken. That was the level of $186. And from this support level, against the backdrop of the divergence, you can see it on the chart, the price dropped by 34%. What do we have now? Now we have a very similar situation. That is, we have a clear divergence and we have a clearly defined support level based on the January 2025 candle close. But this level, by the way, is $689.17. But the previous monthly candle, namely the January one, closed above this level, which means that for two reasons we have no right to consider short positions right now. First, because we haven't broken below this level, and second, because the January candle has, overall, engulfed the decline of the November candle. Although this probably happened in December, it's not essential. In other words, there are very high risks of a decline here, but for now we cannot consider short positions because on the monthly candles we are trading above 689.17. Also, note that from this support level, after the price broke above it and then below it, it dropped by 15.5%, but that's clearly not 34%. And we can see that the stock has grown significantly since then. So the risks are very high. The target values for the RSI are in the 50 range. Let me emphasize that's for the RSI, as well as 30. And in terms of price levels, that's $547 and the next one is $382. And roughly in the same area lies the 50-month moving average, which notice we broke through together with the 100-month average. On the weekly candles, the situation isn't great either, but even here, it's not possible to open short positions. Why? Because the price has broken through the 50-week moving average and has already stopped its decline twice around the 100-week average, which is shown as a red curve on the chart, and now it has consolidated above the 50-week average. This means that if the resistance level of $736.60 is broken, there is every chance to see further growth. But is it worth buying now? If, once again, we look at the monthly candles, then under no circumstances should you consider buying right now because the stock is on the verge of a downward breakdown, although this breakdown has not yet appeared on the chart. Is it worth selling now? Also no, because first we need to see the engulfing of the January 26th candle and a confirmation, meaning the weekly candle closes below the 50-week moving average, which is below $668. Therefore, for now, we simply sit and watch, doing nothing, but I emphasize that the risks of a decline are very high. If you don't know where you can trade, invest, or open positions on this and other instruments that I review, here you go, a QR code on the screen or a link to the website, and you can do it just like I do on the QuantFuel platform. At the same time, you don't pay any commissions and you trade at spot prices. Let's continue. Now let's look at the daily candles. On the daily candles, the situation is more clear-cut. We can see one attempt to update the all-time high, which was successful. The second attempt failed, although we got close, and this suggests that there may be strong sellers in the market. At the same time, we see the price breaking through all the moving averages. So here it breaks through the 50-day, here the 100-day, the 200-day, and the 300-day moving averages, after which it makes 3 tests of the 200-day, drops down again, and then consolidates above all the moving averages, testing the important level of 736.60. Here it is marked right here with a red circle, and considering that this level was actually falsely broken, that is, the daily candle closed above it, but then we went down, there are significant risks of a decline. But when do we say that the trend has changed direction? Most likely it will be when we see that on the daily time frame, the stock has settled below all the moving averages, which is the area of the white rectangle, below the $656 level, that is below the 50-day moving average. So right now, we're saying that the stock has a high chance of a strong downward move in terms of monthly candles, but neither on the daily candles nor, even more so, on the weekly candles, is it appropriate to consider short positions at this time. At the same time, if you have long positions, it makes sense to secure them with a stop in profit so you won't regret lost gains later. At the same time, it should be noted that if the price once again consolidates above $736.60, this would be a chance for a new all-time high. But again, it's not a reason to buy this stock in the current market phase. See you next time. The next video will be about Bitcoin. Subscribe, leave your comments, and read the one I've pinned under this video. Goodbye.